We are now going to introduce our next panel. We have the pleasure to be joined by Early Boykins, Joyce Sanchez, Mondir Carpin, and Alexander Kendler. So please welcome them. They are going to speak about a topic that I'm sure all of you care about. It's technology and SEZs and how an investment in technology. So welcome.
Yeah, so hi everyone. Thanks for inviting me early to this panel. My background is in capital markets and in fintech. Created a alternative trading platform, probably called Zombato. Worked at a number of large in banks like JP Morgan and Morgan Stanley. From there, started a tech company called Q Technologies that was accelerating crowdfunding. And then got involved in the digital asset space, starting a cryptocurrency exchange, as well as been in venture capital in AI specifically, and now I'm focused on online capital markets. So thank you.
Alexander.
Hi, I'm Alex Crandler. I also have a finance background. I've worked at places like Morgan Stanley and Deutsche Bank, and also at a hedge fund on the quantitative side, and had a tech startup. Currently, I'm a founder and partner at Crandler Graph, where, among other things, we focus on fundraising and M&A for special economic zone projects.
Hello, everyone. My name is Mondir Kantir, and I'm the head of an African think tank based in Africa, in Tunis city, dealing with the public policy. I'm also advisor to several governments and NGOs for economic development and innovation, and also member at the World Angel Investors Forum Business School on IP, especially, or as a specialty.
I think that the current economic situation should be positive for a new SEZ formation. I think governments are going to look at alternative ways to attract economic activity and stimulate growth. I think the increases in investment, though, are likely to occur slowly. I don't think that these projects currently have a lot of visibility among mainstream investors. They're not really familiar with the asset class, if that's what you want to call it, and they have sort of limited appeal to broad investor demographics. So I do think it should increase, but I think the will be slowly in coming stages.
Yeah, I agree. I think when you have disruption and there's massive change, it also creates new opportunity in a way that the government's going to have to look at lots of different tools and policies to stimulate growth. And this is exactly what happened after the Great Depression. The government created foreign trade zones. And so I think that, when we start to look at what are some of the options here to increase new capital and new markets and new activities, special economic zones and also innovation zones are going to be something that's going to be very interesting for the government, especially as they start to look at infrastructure next. So we have a big opportunity to invest in infrastructure in this country with P2P type solutions. I think that is a great place to jumpstart a lot of capital in these type of zones in all areas, from not only technology innovation, but also advanced manufacturing. And then we could also augment that type of capital with traditional institutional capital and provide some incentives like what we did prior with Build America bonds, and provide those incentives. And then we could also add additional capital from the retail markets through the tools available through the Jobs Act. And there's also a move with the SEC to increase the amount of money that's invested through online capital markets up to $5 million for Reg D offerings and up to $75 million for Reg A+. And those type of things are going to be very advantageous for us, kind of creating kind of this new kind of economic power, along with the opportunity zones that came in force recently with the recent tax law. So I think there's a lot of things to look forward to as policy officials start to look at new innovative solutions here.
So who's getting it right? What SEZs, what basic models are you looking at when comparing SEZs and future SEZs?
I think I would highlight two examples in particular. One is the Dubai International Financial Center, of course, which has seen A, tremendous growth, and B, returns for investors. And it's also played a critical role for economic success in the region. It's a pretty easy example to point to. I think another one, which a lot of people might not be familiar with, is CFLD International. It's a Chinese corporation that has done a lot of work in Asia. It's collaborated with a lot of governments in Asia. They built over 80 industry cities and attracted over 70 billion in investment. They've really built a pretty scalable model. So I think those are two interesting cases to look at for any upcoming SEZ project to study very, very carefully as they construct their execution plans.
Maybe to add something about that, the current crisis shows that these SEZ are not connected or truly connected to the local economies. So they showed their limitation in terms of supply chain, in terms of even impact on society and the environment. The current COVID crisis is certainly an opportunity from that perspective to review investment strategies, to strengthen first governance, and also to better manage risks. And for this, the context is very favorable to consider at least three axes or three dimensions. Redefining the value proposition by integrating digital, redefining the business model by monetizing data, and revisiting governance by integrating the United Nations SDGs. I can elaborate on this later on, of course.
So what are characteristics worth looking into when investing in an SEC, and what would make them more attractive? What would garner more investment in some of these zones?
Yeah, great question. What you want to look at from an investment standpoint, from institutionals, they want to look at really what is the success of this zone taking off, right? So if you're only giving a few relief on a few tax or regulatory policies, you might have a minimal chance of this taking off. The more that they can provide on liberalizing regulations, the more incentives they can provide with capital, especially with in the private markets, to encourage more investment, because a lot of the institutional capital comes in, it's foundational capital, right? And so you're looking at investors that have a longer time horizon. Those are going to be your pension funds and sovereign wealth funds, and so they're going to look at that very, very differently. And so if they have a unique time horizon, like if they're investing in infrastructure and there's some sort of additional support they can get, or tax relief, that's going to be attractive. And from a city standpoint, or if these are done virtually, which are also a very interesting way to look at, allowing for new types of business models is going to be very, very fortuitous for this, as well as how they can expand value pie through unique stakeholder engagement, because ultimately these things have to work when everybody's involved and everybody is benefiting from this. And so that's everything from in the local communities, that's in the startups that are involved, that's from the real estate that goes into this, the intellectual property. There's ways that education, universities could provide technology transfer agreements. There was a law that never got passed, but it had huge bipartisan support called the Startup Act that was going to encourage that. And that could have also helped out a lot of education. University money can go there. So having a really holistic viewpoint is ultimately not only going to be best for the special economic zone, but also be best for investors as well. And that's where you want a win-win solution.
Yeah, I think to add to that, I think it's important to identify whether the project is driven by private interests or by a government, and who is really the motivating driver behind it. I think if it's a private project, the success is a lot more dependent on the follow-through ability of the management team, and the investment opportunity tends to be more clear. I think If it's a government, the whole situation tends to be more fluid. So there's various groups that, and management teams that may work on the project. There may be more diverse investment opportunities. So I think that's an important thing to look at. I think additionally, an important criteria is whether it's an upgrade. Is the project an upgrade of an existing community, or is it a greenfield project? I think it changes. It changes the investment opportunity depending on which one it is. If it's an upgrade, you really need management that has deep local experience and networks. You need investors that have experience in distressed investing and turnaround opportunities and a clear understanding of the local situation. If it's a greenfield project, I think it can be easier initially to plan out and execute and also invest in, but it'll require more research and more upfront investment and certainly more robust execution plans and management teams. I think another thing I think that we tend to look at when we look at these projects is whether a material portion of the project is non-real estate based, because some of these projects really just look like really elaborate real estate developments, but others not so much. Others have heavier technology components. So I think if more than 25% or so of the project is non-real estate based, it makes sense to sort of deconstruct the project into the real estate and non-real estate components, and then market the components maybe to specialized investor groups.
To come back to the holistic view said or mentioned by Joe, I believe that changing patterns of the global value chain will require more technology adoption, as well as digital tools, and to better implement and monitor them, and to monitor the industrial strategies of each country and of each company. It could be within SEZ or outside the SEZ. What was surprising during this crisis that we discovered that the global capacity of industrial capacity to provide medicine, for instance, or whatever, or masks, is not enough to cover the demand, but the demand, the peak of the demand. So here, there is a kind of re-engineering that will be required of the supply chain. Maybe we should have more stocks or inventories, and or maybe smaller cycle time for production. And this is a lot of this could be considered as an opportunity for new companies, for startups. So the global Sustainable Development Agenda, which is embodied in the United Nations, is also key to consider the decision of where to invest. Globally, I believe that the investment, global investment, including FDI, will be shrinking in the coming months and even maybe years, at least for generally speaking, for industry. So the only way to push forward investment is to have reasons to do it. It should be strategic, top strategic, not only for the company, but also strategic for the government and for some stakeholders. It could be the SEZ, for instance. Now we have key dimensions driving SEZ success or future success: strategic focus or specialization, regulatory framework and governance. They should be reviewed, and value proposition, not only for investors, but for all stakeholders. Okay, this is what to come back to the SDGs. So the challenges are there. We have to change the patterns of international production, the way we produce and consume, and SEZ could play a key role in that.
How can technology implementation de-risk investment in these zones? How can technology be like a differentiator and a major driver for these special economic zones in the future?
Yeah, great question. Technology can be very beneficial in multiple ways. So from allowing these economic zones to provide much more impact instead of just having people in a physical location through real estate or R&D and manufacturing, could also allow these to be much more virtual type of ecosystems. They can be more specialized, and so you can have regulatory frameworks and policies regarding, let's say, one focused on biotech, which would look different than one focused on ag tech, and another one on fintech. And so you can enable those type of activities. You can also increase the amount of opportunity in the investment arena for this. And so one of the things we didn't touch on, investors really not only want great returns, and I think having much more flexibility in business models and incentives is great, and also de-risking, right, through diversification. But largely also one of the big things in this area is liquidity, and that's the other big thing that investors really want. And right now there's not really great avenues for liquidity in special economic zones, and I think there's a big opportunity there to create more clarity and more transparency and more standardization in the investment merits of these types of securities. And so they could actually be traded on secondary markets and new types of exchanges that could be created. And that's where a lot of technology can come into play to actually enable that, as well as other professional services and other types of engagements that people could contribute to the success of these projects.
Thanks. Maybe I can advance here the two ideas I want to share with you. The first thing to bring technology in the SEZ is, first of all, is the connection, to interconnect capabilities inside the special economic zone, but also outside or between different special economic zones. That's very crucial. The connectivity is very crucial, and technology will enable connectivity. The second level, or second idea, is about business model. This is what I said at the beginning, at the introduction. We have to combine business models and to monetize data, to integrate more data as not only for decision making, but also as a service. So data as a service could be another layer to optimize the investment return. Okay, so that are the two ideas, and I think to make them happen, we need a lot of small companies called startups to enter the value chain and to be there to boost this digitization of the value chain.
Yeah, I think the technology platform is really a differentiating factor for these projects, especially if you compare two projects that look the same in terms of their real estate components and some of the components of their jurisdictions and the incentives they offer for businesses and residents. I think managing all that information and the operations of the jurisdiction requires a very sophisticated technology platform. You have a lot of information and you have a lot of complexity, and to that extent, the operations should depend pretty heavily on the sophistication of the technology platform. So I think for an investor, it should be important to know that that the technology platform is well thought out and it's robust and it's set up by experienced people.
Typically, we see a lot of industrial activity in these zones. Do you foresee investment in more real estate and smart urbanization with smart cities?
Take a stab. I foresee that. Yes, I think that people are looking to kind of one of the trends you see kind of in the world today is people are trying to want to live in communities that share their values. And these days you can work anywhere. You have the technology, so you might as well live with communities that can come together to create value in certain specialized fields. And of course, if there's a new incentive there, these are newer types of cities with new development opportunities. I think that becomes very interesting, and that actually opens up the opportunity where these things can really be set up anywhere. And you see cases of these being tried to be set up in even the ocean. And so and perhaps we'll even see something in the not too soon future being set up on Mars, perhaps, right? So that's where, I think it gets really interesting, is you can kind of be kind of on the frontier or a pioneer in these new types of cities, and really define what's possible in the urban environment, right? I think if someone was, I think it was Andreessen Horowitz was saying that we just don't build anymore. We're not building those skyscrapers. We're not really modernizing our cities. All our skyscrapers look the same, right? So if you can really just totally reinvent how cities look and feel, it's could really be a game changer in multiple ways, and just spur massive amounts of creativity and innovation for those populations.
I think that the real estate component should be important, more important going forward as you have more competition. I think for a special jurisdiction that really has no competition in terms of the value propositions of the jurisdiction, the quality of the real estate component isn't going to be a differentiating factor. But if you have multiple jurisdictions which have to compete each other, and especially if they have a residential component, I think it's going to be critical that that the real estate components are attractive, and that it is a city that people would want to live in. So I do think that is going to be important going forward.
Okay, let me add maybe a funny picture about the smart cities concept. With the outbreak, we in fact created a special economic zone in each home, in each house. So we started doing co-working and co-living and co-family with co-business in the same place. And this is the nucleus of what could be called smart city. In fact, smart city is a place where people could live in a comfortable way, that don't need to travel a lot to reach their job or their home, and they can have under their hands every let's say commodity and everything they need, and the comfort services they need. So how to make this sustainable? This is the question. How to avoid to have technology, getting only the economic dimension. It should also have the social and environmental dimensions. And here I come back to the ethics and to the governance. Smart cities are a good concept if we include them in a good vision of ethics. Social and
welcome, Marquise.
Hey guys, I've been sitting here. How you guys doing? I'm the chairman and CEO of StatZero. We raised $250 million to an anchor to $1 billion fund. Super excited to be on this call. I've been up since for an hour, just kind of trying to get on the back end. I got kicked off twice, but super excited to be here, guys. And I listened to the last half an hour of you guys talking, so it's been awesome.
Is there anything you'd like to add?
I would say I'm more focused on governments. So our thesis is we put $100 million towards governments, and we're focused on governments. So there's I came to, just as a heads up, I met Joe a couple years ago and his team when they were doing their work at City College. At the time, I was an executive at IBM, and we were trying to, my portfolio was Europe and North America, but I had taken on the Middle East and Africa, and was supporting the $1 billion opportunity for the whole of government in Australia. The reason why I bring that up is in Dubai, they were testing special economic zones. In Australia, they were testing special economic zones. And in Africa, they were wanting to test special economic zones, but I didn't know anything about it. And so I came to City College that day as a novice to the industry, or special economic zones, walked away with a ton of great information. So where I see us investing in special economic zones, I really love Joe. I really love what Joe's working on in the Startup Societies Foundation, and what Nuance is working on. We're making a commitment to invest in building a special economic zone fund with the support of Nuance and Joe moving forward, which is what we're super excited about. There's a lot of different areas. Joe's the expert in the space. Obviously, I'm not. But to the extent that I'm willing to invest, what I'm interested in is using those zones as a mechanism for innovation. Like Dubai Oasis, you're seeing them used in education zones. You're not really seeing them used here in the U.S. Significantly. And my hope is we can start to use them here more, or use them to our benefit for the startup space as well. So that's more of our focus, and we're gonna, in the next 3 to 6 months, stand up a special economic zone fund that will be supported and co-led by Nuance, with a focus on startups in vulnerable communities and populations.
Nice. So I guess what we can do now is transition over into the Q&A. We have a few questions from our viewers. So one of them is, where do you look for new projects? I mean, it's not like these are on crowdfunding or anything like that. How do you guys get deal flow and kind of be able to look and see what's the latest SEZ or opportunities to invest in an existing SEZ?
Okay, maybe I can start because I'm a little behind. I am upstream. I'm designing the strategies for the government. So I'm writing terms of reference for them. So how to do the call for projects and how to start the inception of the preparation of the future special economic zone. And let me here take 2 minutes to talk about my experience with Tunisia, which is in North Africa, having already 12 special economic zones. 3 are offshore zones, and the remaining are techno science park and or competitive park. So the names are a little bit different from country to country. And the idea with the 6 new projects, the 6 new logistic zones with a combination of different, a mix of business models, how to integrate all these with the previous investments. And this is very critical, not only investing on the capacity or the infrastructure to be developed, but also the connectivity or the connection with the existing ones. And this is very key and very crucial to the success of any project. You have to know that, globally speaking, half of the special economic zones are occupied in terms of the occupation rate. I mean, so we have still a lot of free capacity, and most of them are not reaching their objectives in terms of financially speaking, and also in terms of impact to the local economy. So here, I'm also keen to hear the position of each one about this.
I basically rely on my networks and being active in communities like these, because it is difficult to find a deal flow through some sort of centralized marketplace. So I think it's incredibly important to be active and connected within the special economic zone ecosystem.
Our next question, actually for Linder. What do you see as the opportunity for new SEZs to attract EU Green Deal funding aligned to policies that address sustainability goals and net zero 2050 commitments?
So I'll be direct.
Okay.
Picking up the question. So
please.
Our organization is called Stat Zero. Stat Zero means a focus on statistical zero, which is twofold. One is UN SDGs. So we created an entire impact methodology that links to an investment strategy. For example, the Swedish Energy Agency is one of our clients, and what they're working on is they're trying to bulk together carbon, 6 startups, gigaton of carbon. They recognize, though, within country that they want that as a capability for the world, not just in country. And so what they offered up was 45% non-dilutive funding as long as co-investors matched the other 55%. So there's these innovative financial mechanisms that are starting to come out, specifically as it pertains to the UN SDGs. I sat and went to the Climate Action Summit, and I was with the mayors who signed the Carbon Cities agreements. The problem with the UN SDGs as it relates to special economic zones, I actually think it's a unique opportunity. So if you look at California as a prime example, California has pockets of bad gases, things that are bad for the environment, and they kind of build up, right? So what you need then, and it doesn't come over the mountain. So you almost need to turn California from a climate perspective into a special economic zone to some extent that would allow people to start playing. And last year there was a guy who from Ocean Cleanup who took a barge with the support of the city of San Francisco and the government of the Netherlands, and he started doing plastic cleanup off the side of the coast. And that was classified to some extent as a special economic zone, which is why they allowed him to do it. So I think if we can figure out a way to build out special economic zones or classify special economic zones for climate and environment, then we have a great shot at creating new green energy and new jobs. So let's be real, right? The coal industry, all these guys, that industry is still booming and that industry still makes money. We know that we need to creatively destruct the industry, but we also need to be cognizant of job creation, job destruction. And so I think a special economic zone would allow for that. And thinking through some of the job creation specifically as it pertains to green new jobs. But it also requires strong policy making both and an embracing of that policy. And unfortunately, the US president is not for it, even though he's working on some solar issues and resilient infrastructure. I think if we're looking for something to focus on with regards to the environment, it should be resilient infrastructure because it crosses every single domain from insurance to banking. I was with the SVP of banking and she said, hey, like my clients, they're now worried about, natural disasters. They're now worried about this. And we're taking on huge risk because of us giving the money and then having the property. So like we need to figure out something around climate change because we can't keep going, we're gonna go bankrupt if we need to continue supporting these kinds of initiatives after a natural disaster. So it was quite interesting. And a lot of people, ironically, were moving from San Francisco to Redwood City because it was protected by the water. And unless a fire broke out on the peninsula, like you weren't gonna have risk of having a fire come because you were protected by the water. And so a lot of people are thinking through that. And I give that just the nuance of that just as explanation to say, hey, I think we're just getting started on special economic zones in the US. And there's a lot more opportunities. And I'm really looking forward to advancing those with this community moving forward.
I'd just like to add to that briefly that, there are a ton of social impact funds and impact investing funds that should be considered for these projects. And to that extent, when marketing the project, it's important to outline, what the non-financial returns will be and to outline, will there be benefits in terms of carbon emissions, in terms of benefits for underrepresented groups, and to really look at what are the mandates that these funds have and how you can meet them. And I don't think a lot of people are currently doing that.
I have another question.
Yeah, sure. Just can I add one sentence here about that? Okay, finance is important. This is very important leverage for investment. And I think the dry powder is there for impact investing. There is money, and we will keep, I think, this amount of money available for the next for the post-COVID outbreak. What I suggested to one government is to have a kind of PPP, public-private partnership, including and to include the investor or the financier in the loop, to sign not only with the bidder but also the investor backing the bidder, and this will make it better for the governments. to manage the risk for risk mitigation later. And value for money, of course.
I agree with Mondar that a government has to take a risk. Like when I worked at the White House, a government won't take a risk if they don't understand the economics or there's not a community of players. So the reason why I talked about resilient infrastructure, I think one person mentioned net zero. In California, one of the problems that California has is the throughput of housing, right? We also know that the Realtors Association of America wants to move from using steel to using more sustainable resources. There's a company in our portfolio, just as an example, that recycles plastic. I have them in front of me, right? They take plastic from Nestle, they recycle the plastic, they make sheets for housing. They have a deal with Habitat for Humanity in so much that they can build sustainable housing. But you need kind of those special economic zones to say, hey, would I be willing in a situation like Paradise, where Paradise burned down, to now establish modular housing in that geography, sourced with sustainable resources, not just steel, and what does that look like, right? So I think the conversation is now getting started, and the question is, how do we use special economic zones around net zero moving forward? And I think there's some really cool opportunities to do it, but it requires a multi-stakeholder initiative or a coin-driven goal that has a problem, which is why I pointed to resilient infrastructure. If we wanted to rally around green jobs, it's too polarizing of an issue right now. So, but I do think that resilient infrastructure is the way to go if we were to rally to try to get a focus on SEZs in that space.
Well, I'd like to thank you all for your time. That concludes our discussion, and there's some really excellent insights from each and every one of you. I guess we'll have Joe come on, and we'll transition over to Michael, our next speaker. Thank you once again.
Thank you.
Thank you.